If you currently own silver, stop scrolling, breathe deeply, and pay close attention. Because instances like this, calm on the exterior, strained beneath, are the instances that silently distinguish those who merely endure from those who flourish. Most investors never identify these pivotal moments until years have passed. Today, you possess the benefit of recognition. Let me share a brief narrative. During the 2008 financial crisis, an acquaintance of mine, average employment, average earnings, felt frightened like everyone else. Markets crumbling, news broadcasting terror, relatives urging him to liquidate everything and hold cash. But he didn't lose composure. He didn't become paralyzed. He researched. He observed what the composed, methodical investors were executing. He gradually acquired assets when others were fleeing. 10 years afterward, while people were still discussing what they'd sacrificed, he was quietly existing in an entirely different financial dimension. Not because fortune favored him, but because he mastered how to reason. That's the initial lesson. Your prosperity is constructed in your mentality before it materializes in your financial accounts. The market relocates currency from the impatient to the patient, from the emotional to the methodical, from the frightened to the concentrated. And silver, like numerous exceptional opportunities throughout history, examines precisely that. Here's the micro-truth most people overlook. Every substantial financial advancement emerges within maximum confusion. Gold, property, technology equities, petroleum, cryptocurrency, every generational victor appeared frightening before appearing evident. Silver today occupies that same uncomfortable territory. The commotion is deafening, perspectives are radical, and that's typically when something significant is developing. Consider silver as a compressed mechanism. Tension accumulates silently, supply contracts, demand expands. The mechanism doesn't generate sound until it bursts upward. Intelligent investors don't pursue the explosion. They establish position beforehand. Reflect on how Warren Buffett approached investing. He never attempted to forecast tomorrow's news. He concentrated on lasting worth and methodical accumulation. The identical reasoning transformed average individuals into exceptional wealth constructors during the 1970s metals expansion, the 1990s technology acceleration, and the post-2008 recovery. They didn't understand the precise timing, they understood the trajectory, and this applies to existence equally as currency. Your personal advancement compounds identically to how your investments compound. Small, consistent behaviors, continuous learning, composed decision-making, emotional governance, these are the invisible practices that generate visible achievement. Here's your transformation shift. If you possess silver, cease monitoring price hourly. Instead, construct a straightforward plan. Understand why you possess it. Understand your time frame. Determine beforehand what circumstances would prompt you to add, maintain, or decrease. This eliminates emotion from your future choices and substitutes it with authority. Second transformation shift, strengthen your income mechanism. The finest investors aren't merely asset purchasers, they're cash flow constructors. Cultivate abilities, expand your enterprise, increase your earning capability. The more currency you produce, the more opportunity you can seize when markets present discounts. Third transformation shift, train your nervous system for uncertainty. Uncertainty isn't danger, it's opportunity concealed. Every accomplished entrepreneur masters operating when results are ambiguous. That's the cost of advancement. Remember this, the masses wait for certainty. Leaders advance with clarity of intention even when the route isn't completely apparent. Someday you'll reflect on this season, this precise period of doubt, commotion, tension, and recognize it was silently molding your future. Remain composed, remain patient, remain invested in your development. Prosperity is constructed when preparation encounters opportunity, and both are occurring presently. Uncertainty is the invisible laboratory where wealth is silently constructed, and most people never enter because it feels uncomfortable, unfamiliar, and emotionally taxing. When the world appears volatile, when news reports are saturated with doubt and financial anxiety, that is precisely when the groundwork of future achievement is being established for those who understand how to stay composed and concentrated. History never compensates the people who wait for certainty because certainty always materializes after the opportunity has already disappeared. The individuals who alter their financial trajectory are the ones who master operating while everything feels unclear, when results are unknown, and when the majority is immobilized by hesitation. Every substantial transformation in wealth has followed this precise sequence. During the Great Depression, the oil emergency, the dot-com collapse, the 2008 financial catastrophe, and even during global lockdowns, the people who studied rather than panicked, who positioned rather than retreating, and who maintained discipline rather than emotion ultimately constructed fortunes that seemed impossible at the time. While the masses were pursuing safety, these individuals were silently acquiring assets, knowledge, abilities, and leverage. They comprehended that uncertainty is not danger. It's simply the market presenting discounted futures to those who possess the courage and preparation to identify it. On a personal level, uncertainty functions identically. The instances when your career feels volatile, when your enterprise feels vulnerable, when your finances feel constrained, and when your confidence is being examined aren't indicators of failure, they're signals of transition. Development doesn't occur in comfort. It occurs in challenge. Every entrepreneur who has constructed something meaningful has confronted periods where nothing seemed guaranteed. Yet they continued advancing because they understood that momentum is generated through behavior, not reassurance. Prosperity isn't constructed by people who wait for perfect circumstances. It's constructed by those who train their nervous system to function within pressure, who develop the discipline to make composed choices when others are emotional, and who master holding their vision steady when the environment is volatile. This capability becomes a competitive advantage in both investing and existence. When others react, you observe. When others panic, you prepare. When others withdraw, you silently advance. The genuine power of uncertainty is that it discloses who you're becoming. It compels you to upgrade your reasoning, your practices, your patience, and your dedication to long-term achievement. It instructs you how to trust your preparation instead of your fear, how to invest in yourself when results aren't immediate, and how to continue constructing even when advancement is invisible. Over time, this compounds into confidence, clarity, and command over your financial future. Those who master uncertainty don't become prosperous overnight, but they become unstoppable over time because they comprehend that while the world is distracted by fear and commotion, the future is being purchased in silence by those who are composed enough to perceive what others cannot, disciplined enough to act when others hesitate, and committed enough to continue when most people surrender long before the reward becomes apparent. If this message fortified your perspective, engage with the content so it reaches others who need this viewpoint. Subscribe for additional guidance on constructing wealth, discipline, and financial independence. Share this with someone who's holding silver and experiencing uncertainty. And remember, your future is not determined by markets. It's determined by the quality of your reasoning when markets are uncertain. Mentality generates currency before currency materializes in your existence. Because every financial result is first influenced by how you reason, how you determine, and how you conduct yourself when nobody is observing. Long before prosperity manifests in your bank account, it begins forming in your practices, your patience, your self-conviction, and your willingness to act even when results are uncertain. The external world of income, assets, and opportunities is always a mirror of the internal world of discipline, concentration, and emotional governance. People pursue strategies, markets, and patterns, but the genuine advantage is always the person executing the strategy. Examine any accomplished investor or entrepreneur, and you'll observe the identical foundation. They mastered delaying gratification, maintaining composure when circumstances were deteriorating, and continuing construction when advancement was slow and invisible. Warren Buffett didn't become prosperous because he forecasted every movement flawlessly. He became prosperous because he developed a mentality that appreciated patience over excitement, consistency over intensity, and long-term reasoning over short-term emotion. The identical sequence exists in every industry. Athletes, business executives, innovators, and investors all train their minds long before they collect outcomes. Your mentality governs how you respond to pressure. When markets decline, some people panic and liquidate, securing their losses. Others study, accumulate, and prepare. When opportunities manifest, some people hesitate because they fear making errors, while others advance knowing that errors are part of the progression. The distinction between these two categories isn't intelligence, education, or background. It's mental programming. Most people are unconsciously trained to avoid discomfort, seek approval, and pursue quick rewards. Prosperity is constructed by executing the opposite. You must become comfortable being uncomfortable, confident without validation, and patient without guarantees. This is how your financial existence begins to separate from the masses. The most powerful investment you'll ever make is in your reasoning, reading, learning, observing markets. Studying accomplished people and developing emotional governance all compound silently over time. Eventually, your determinations become sharper, your confidence becomes unshakable, and your capability to identify opportunity increases dramatically. This is why two people can perceive the identical situation and generate completely different outcomes. When you shift your mentality, your behaviors automatically follow. You cease wasting currency on distractions and begin deploying capital with intention. You cease reacting emotionally and begin responding strategically. You cease fearing failure and begin utilizing it as feedback. Over time, this mental evolution generates financial outcomes that seem impossible to outsiders but completely logical to those who comprehend the progression. Currency isn't attracted to wishful reasoning. It's attracted to discipline, clarity, patience, and consistency. These qualities are constructed internally long before they materialize externally. When your mentality transforms, your standards elevate. When your standards elevate, your conduct upgrades. When your conduct upgrades, your financial existence transforms, and the version of you who once struggled becomes unrecognizable to the person who eventually constructs wealth. The The masses wait while leaders position early. And this singular principle explains the distinction between average outcomes and exceptional results in both prosperity and existence. Most people spend their existence standing on the periphery, observing events develop, waiting for the instance when everything feels safe, evident, and guaranteed. By the time that instance materializes, the opportunity has already been claimed by those who advanced when circumstances were unclear. The majority needs proof before they act. Leaders act before proof materializes. Every substantial breakthrough in business and investing follows this sequence. Before Apple became the most valuable company globally, its future appeared fragile and uncertain. Before Amazon dominated global commerce, investors questioned whether online shopping would function. Before Bitcoin became a global asset category, it was dismissed as worthless code. Those who waited for clarity paid a premium. Those who positioned early paid attention. Early positioning isn't about recklessness. It's about preparation, observation, and courage. Leaders don't gamble blindly. They study sequences, learn from history, comprehend cycles, and then make determinations when the risk-to-reward balance favors long-term expansion. While the masses react emotionally to headlines, leaders analyze silently. While the masses seek consensus, leaders seek asymmetry. While the masses pursue comfort, leaders accept discomfort as the admission fee for advancement. In personal development, the identical principle applies. Most people wait until they feel motivated before taking behavior. Leaders construct discipline first and allow motivation to follow. Most people wait until they're confident before initiating something new. Leaders initiate while uncertain and construct confidence through execution. This is why the distance between average and exceptional expands over time. Positioning early also requires emotional maturity. You must tolerate being misunderstood, criticized, and isolated in your reasoning. When you invest before the masses, your determinations frequently appear incorrect initially. The market doesn't compensate courage immediately, it examines it. Those who cannot withstand this pressure retreat back to safety and familiarity, surrendering their future gains. The people who alter their financial trajectory master thinking in decades, not weeks. They're willing to sacrifice short-term comfort for long-term leverage. They invest in assets, abilities, and knowledge when these things are undervalued, unpopular, or overlooked. By the time the world acknowledges their worth, the leaders are already positioned and compounding. This is the concealed advantage of early positioning. You gain time, and time multiplies everything: growth, learning, relationships, and returns. When the masses finally arrive, you're no longer pursuing opportunity. You're managing abundance. Leadership isn't loud. It's quiet, patient, and disciplined. It occurs in private determinations, long-term reasoning, and in instances when nobody is observing. The masses will always hesitate, doubt, and delay. Leaders advance first, not because they're fearless, but because they comprehend that waiting for certainty is the most expensive determination anyone can make. Silver compensates patience, not emotion, and this truth sits at the center of every accomplished investor's journey through volatile markets. Most people approach investing like an examination of intelligence, but in reality, it's an examination of emotional discipline. The price movements, the headlines, the perspectives, the sudden shifts in sentiment are designed to trigger human instincts of fear and greed. Those instincts feel natural, but they're expensive. The investors who construct lasting prosperity are the ones who master separating what they experience from what they execute. Patience isn't passive. It's an active state of controlled conduct. It means you comprehend why you possess what you possess. It means you're not disturbed by every short-term fluctuation. It means you permit time and compounding to execute the heavy labor while you remain concentrated on the larger picture. In the world of silver, this becomes even more critical because the market is famous for dramatic cycles of excitement and disappointment. Those cycles are what eliminate emotional participants and compensate the disciplined ones who stay positioned. Consider the great commodity cycles of the past. In the 1970s, metals expansion, many investors liquidated too early because they became afraid of temporary reversals. Others purchased at the peak because excitement overpowered logic. The victors weren't the loudest or the most confident, they were the most composed. They possessed conviction rooted in research, not reaction. They comprehended supply, demand, monetary cycles, and long-term economic pressure. While the masses pursued price, they followed progression. Emotion generates urgency, and urgency generates errors. When silver declines suddenly, fear indicates something is incorrect. When silver climbs quickly, excitement indicates pursuit. Both voices are hazardous. The disciplined investor substitutes emotion with structure. They determine their plan before the turbulence materializes. They define their risk, their timeline, and their objectives beforehand. This transforms volatility from a threat into a tool. Patience also extends beyond investing. In existence, achievement originates from the identical discipline. Careers are constructed through years of learning and consistent effort. Enterprises expand through seasons of uncertainty, experimentation, and persistence. Relationships, health, and confidence all require long-term dedication. The people who achieve exceptional results don't rush the progression. They trust it. Silver becomes an instructor in this journey. It trains you to maintain steadiness when others shake. It compels you to confront your emotional reactions and upgrade your decision-making. Over time, this discipline compounds into clarity and confidence. You begin perceiving opportunities where others perceive chaos. You remain composed where others collapse. The investor who masters patience is no longer governed by the market. They're directed by their strategy, their comprehension, and their long-term vision. Emotion diminishes, discipline fortifies, and advancement becomes inevitable. Silver doesn't compensate the fastest, the loudest, or the most excited. It compensates the one who stays concentrated, prepared, and steady while the world rushes in every direction simultaneously. Income expansion fuels investment capability. And this principle silently separates those who struggle from those who steadily construct prosperity over time. Many people concentrate only on selecting the correct assets, the correct markets, or the perfect entry point, yet overlook the mechanism that makes all of that possible. Your income is the raw material of your financial future. Without expanding that mechanism, even the finest investment opportunities remain limited. When income expands, options multiply. When options multiply, command increases. The most accomplished investors aren't simply market participants, they're value generators. They increase their abilities, their knowledge, their networks, and their capability to solve problems at a higher level. Want to know the real secret to getting rich? It's not about finding that one magic stock or a get-rich-quick scheme. It's simpler, yet far more powerful. Today, we're diving into the 3 core principles that truly build wealth: expanding your income, maintaining discipline, and conquering your fear. Stick around, because mastering these will change your financial life forever. Let's start with the first one: expanding your income mechanisms. Most of us are taught to have one job, one salary. But this is like trying to build a castle with only one type of stone. True wealth comes from creating multiple streams of income. Think of it like this: your skills are your most valuable asset. Each new skill you learn isn't just an addition, it's a multiplier. Imagine you're great at writing. That's one skill. Now you learn graphic design. You can now offer a package, written content plus visuals. Then you learn SEO. Suddenly, you can offer a comprehensive digital marketing service. Your value doesn't just add up, it compounds. You've gone from being a writer to a one-person marketing agency. This is the compounding effect of skills. Look at entrepreneurs like Elon Musk or Jeff Bezos. Did they stop after their first success? No. Musk went from online payments with PayPal to electric cars with Tesla, space exploration with SpaceX, and neurotechnology with Neuralink. Bezos started with books on Amazon and expanded into, well, everything. They didn't just earn more money, they built more mechanisms to generate money. You don't have to be a billionaire to apply this. Start small. If you're an accountant, maybe you can offer freelance bookkeeping services on the side. If you're a teacher, you could create an online course. Your primary job is your foundation, but these additional streams are the pillars that make your financial structure unshakable. Don't just focus on getting a raise. Focus on creating a new revenue stream. That's how you shift from earning a living to building a fortune. Now for our second pillar, maintaining discipline. This is the one that separates the dreamers from the doers. We live in a world obsessed with prediction. Everyone wants to know what the next big thing is, which crypto will moon, which stock will pop. But the wealthiest people don't rely on a crystal ball, they rely on discipline. Legendary investor Warren Buffett famously said, "We don't have to be smarter than the rest, we have to be more disciplined than the rest." Think about it. Predicting the future is impossible. The market is chaotic and unpredictable. Trying to time it perfectly is a fool's game. But what you can control is your own behavior. Discipline means having a plan and sticking to it, especially when it's hard. It means consistently investing a portion of your income, month after month, year after year, regardless of whether the market is up or down. This strategy is called dollar cost averaging, and it's powerful because it removes emotion from the equation. When prices are high, your fixed investment buys fewer shares. When prices are low, it buys more. Over time, it averages out and protects you from the temptation to buy high and sell low, which is what most people do. Discipline also means living below your means. It's not about being cheap, it's about being intentional. It's prioritizing your future financial freedom over a temporary pleasure today. That new car might look great, but is it worth sacrificing years of compounded growth on your investments? Discipline is the boring, unsexy, but incredibly effective engine of wealth creation. Forget prediction. Embrace discipline. Finally, let's talk about the biggest barrier of all, fear. This is the third and perhaps most crucial pillar. Every great opportunity in life comes with a price tag, and that price is fear. Fear of failure, fear of the unknown, fear of losing money. It's the gatekeeper standing between you and your goals. But here's the secret. Fear isn't a signal to stop. It's the admission price for the chance at a great reward. If an opportunity had zero risk and zero fear attached to it, everyone would be doing it, and there would be no profit left. The potential for high returns always comes with high uncertainty. Think back to the early days of the internet. People were terrified. It's a fad. You'll lose all your money. Those who were brave enough to invest in companies like Amazon or Google back then, despite the fear and uncertainty, were rewarded handsomely. Their willingness to face fear was their ticket to incredible wealth. The same is true for starting a business. It's terrifying. There's no guaranteed paycheck, no security. But that risk, that fear, is precisely why the potential rewards are so immense. So how do you handle it? You don't ignore it. You acknowledge it. You understand that feeling fear means you're stepping outside your comfort zone, which is where growth happens. You manage the risk by doing your homework, starting small, and not betting the farm on one single idea. But you have to be willing to pay the price. You have to be willing to be scared. Fear is not the enemy. It's a compass pointing you towards opportunities that others are too afraid to seize. So let's bring it all together. The path to financial prosperity isn't a hidden map. It's a framework built on 3 pillars. First, expand your income mechanisms. Don't rely on a single source. Build a portfolio of skills and revenue streams that compound over time. Second, maintain unwavering discipline. Forget trying to predict the future. Create a solid financial plan and stick to it through thick and thin. Automate your savings and investments to take emotion out of the equation. And third, face your fear. Understand that fear is the cost of entry for life-changing opportunities. Learn to manage risk, but don't let fear paralyze you. These 3 principles work together in a powerful synergy. Expanding your income gives you more capital to work with. Discipline ensures that capital is put to work effectively over the long term. And facing your fear allows you to deploy that capital into opportunities with the highest potential for growth. It's a continuous cycle. The more you expand, the more you can invest. The more disciplined you are, the faster your wealth grows. The more you conquer your fear, the bigger the opportunities you can tackle. This isn't just about getting rich. It's about building financial resilience, freedom, and the ability to design your own life. It takes time, effort, and courage, but the results are more than worth it. Thank you so much for watching. I hope this framework gives you a clear and actionable path toward your financial goals. If you found this helpful, please hit that like button and subscribe for more content that empowers you to build a better future. Let me know in the comments which of these 3 pillars you're going to focus on first. Thanks again, and I'll see you in the next video.